Welcome back to another episode of Wealth Within Reach. And I'm excited to be back with you with another action packed value add episode today. So, today, this episode is for you if you are in a place of you've been really busy throughout the year, you're scrambling, you're trying to figure out, okay, what do I need to do to prepare for taxes? What do I need to do? I know it's right around the corner to prepare for the end of the year, to look forward to 2026. If that is you, this episode is for you. I want to help you think through three high impact tasks that's going to help you to potentially reduce your cash flow, reduce your taxes for next year, and help you start 2026 with a clean slate. Okay. So I'm going to be sharing with you some things that you as a landlord should be doing before the end of the year. All right. So, super excited to jump into this episode. Before I jump into this episode, I want to make sure that you are subscribed to the Owning It and Living It newsletter. My newsletter is so juicy. I share so many good tips on, how to be a landlord, how to start investing, how to finance, even personal life, my personal deals, what I have going on the back end. You want to make sure you subscribe to the newsletter so you don't miss out on anything. And because I know Christmas is coming up, I have something super, super special for you. I mean, if I wasn't on my email list, I would want to get this. Like, I would want this. And I want to make sure you don't miss it because it's coming this week, but it's only coming to people who are on my email list. So be sure that you go to the link below, you join that email list. I'm not going to spam you. My goal is to share with you valuable information, plus give you some things along the way that's going to help you in your wealth building journey. Okay. So wanted to say that real quick. All right. So let's talk about the three most important things you should be doing before the end of the year that will help to set you up for success moving into 2026. All right. And so this one is a big one. You should be doing your financial reconciliation and reviewing your financials on your properties for the year. You should be doing that. You should be meeting with your CPA in Q4. It should not be a surprise next year when you file your taxes. It should not be a surprise. You should already know finishing up the year, what you can expect from a tax standpoint for 2026. Okay. A 100% accurate before the end of the year is key. Here's what's at stake if you don't. One, if you go to any CPA, any bookkeeper between January and April 15th to clean up your books, they are going to charge you premium. Okay. They're going to charge you a lot of money to do that. So and then what if you pay all that money and then you find out that you have a huge tax liability that you could have potentially avoided or planned for even now beforehand, before the end of the year took place? Okay. So get your books in order, even if it means that you have to set aside time to do it yourself. Do that. That is really important. I personally, this is a stickler for me when I'm working with clients. I need you to understand how much you're making every month. If your books aren't in order, that's basically telling me that you don't know how much money you're making. So why are you buying properties? If you don't know how much you're making in your current property, why are we even talking about financing, down payment, buying another property? What are we talking about? You need to make sure that you're making money in your current property. Okay. That's why it's really, really important for your books to be up to par. Here's the thing. This is the task for some reason that I see so many landlords put off. And you say that you're going to do it. You hesitate hiring someone. You say that you're going to do it and you never do it. Bookkeeping is one of the most inexpensive expenses. Okay. This was actually the first thing. The first thing, my first hire was a bookkeeper. And so many people hesitate when they don't even realize it's not even that expensive, especially if you don't have a lot of stuff going on. If you have just a couple of properties, I mean, I remember when I first started, when I hired a bookkeeper, I was paying like $50 a month. It was not a lot of money, okay? And y'all putting that off and you not doing it, and then you end up paying catch up, or it's just so much stress, or you don't even know how much money you're making. I'm sorry to be on the soapbox, but it's a big deal for me because multiple reasons. One, if you do the whole cleanup thing, it's more expensive. If you do the whole cleanup thing, there's a good chance that you are missing deductions that you could be actually getting a write-off for, but because things are so rushed, things are not kept up, the records are not kept as you go, there's a high chance that you're missing things, which means you're overpaying in taxes, which means that that's your money right there that you could be using to scale in real estate, to invest in mentorship, to do something with that you're missing because you don't wanna hire someone to do your bookkeeping. So please, let's not do that, okay? Let's not do that. You gotta prepare. Before the end of the year, I need you to go through and make sure you confirm all your income, all your expenses, make sure things are categorized correctly, make sure we have not been commingling our personal and business finances, making sure that the bank statements are matching with what we're seeing on our accounting software, really making sure we capture all those Home Depot runs, those Lowe's runs, those contractor payments, especially if you've done a renovation this year. Like, you have a great opportunity. If you've done a renovation this year, you have a great opportunity for some premium write-offs, but you gotta have your things in order, okay? So it's really important, your mileage, supplies, all the above. So let's make sure that before the end of the year, we have 100% of our books accurate, okay? That's number 1. That's number 1 in the financial reconciliation category, okay? Because I have 3 categories, but I have a lot of things in the individual categories, all right? All right, next. Next in our financial reconciliation category, what else do we need to take care of? You need to make sure you have your list of 1099 people prepared. I don't know if you realize this, but if you pay someone over $600 and you legally need to give them a 1099, that is a form to show that you paid them for a service. And so the worst thing, that you could do is be reactive about this, and then you start chasing them around in the beginning of the year, and you can't find people's address, and people not answering the, call, especially if they're contractors, they're super busy, they're not answering the phone, you're frustrated, you wanna file your taxes, but you haven't finished all that. No. Let me actually tell you what I do and what I encourage my clients to do, and I actually a part of being in my community is you have access to what we call a resource library. And in that resource library, I actually download all of my personal tools and downloads and standard operating procedures, and basically a lot of my internal systems that I have in my company within the resource library for my clients so that they can leverage that too. So one of the things that my financial team that we do is we do a vendor agreement. So anytime we get ready to work with a new vendor, we say, okay, here's a vendor agreement here. We need to make sure before we even pay you, before we agree to pay you. Okay. Because after you pay them, it's really hard to get it. But before we even agree to pay you, we're going to go ahead and need you to send your W-9 form. Okay, so that has all of your information that allows us to complete the 1099. We need you to go ahead and send that. We need you to also go ahead and recognize, like, here is how we pay people. Here are the forms of payment that we use. Here is when we pay people. And so we send them that, we get the W-9, and then that allows us to pay them when we need to. So that at the beginning of the year, we already have that list of people that we pay out throughout the year. And then my financial team, they issue the 1099s and we're good to go. Okay. And so that's really important to do that throughout the year so that you're not running at the end of the year. But if you are, that's fine. Now you know for 2026 what to do. But before the year ends, go ahead and work on getting all the information now. Okay. And so maybe you've had a conversation with your accountant and you have a tax liability and you're trying to figure out, how do I reduce this tax liability before the end of the year? You have multiple options. I'm not a CPA, so, I'm not qualified to just give you a ton of options, but I'm just telling you kind of what I've done and what I do. some of the things that you can do to maximize, especially if it's not like a lot, you can prepay your insurance. You can go ahead and make an extra mortgage payment, or you can prepay your January mortgage payment that gives you that interest that you can pay off early. Maybe you have some supplies you need to pay for next year that you can go ahead and take care of. Maybe you have some outstanding vendor invoices. Those are just some things if you're very close to being at your number that you want to be at, where you can go ahead and maximize those year-end deductions if you haven't already. This is a big, big one. This is a really, really big one where people leave a lot of money on the table and they end up overpaying in taxes. If you stick with me for a while, I have some episodes that's going to come up in the beginning of next year that's going to really break down how real estate investors are able to save money in taxes. Because I'm gonna say this real quick, and you're gonna hear me say this a whole lot. Okay. The United States government incentivizes people who provide jobs and housing. So people who provide jobs and housing actually get to pay less in taxes because of the risk of being able to do those things. Okay. So it is really, really, really important that you understand what incentives are available to you when you are an investor. Okay. And so one of the things that's really important that I do for my clients is I created this depreciation schedule. And so what it does is there are certain parts of your home that allow you to write off faster than other parts. Like appliances, you can write that off in year 1 versus maybe a HVAC, it may take a couple years to write off, which means that if you buy a new HVAC, say the HVAC system is $8,000, instead of you being able to get that full write off year 1, you may take a couple years, right? And so what all that to say is if you're doing your own taxes, you missing all of this, I'm sure, unless you are a CPA that is familiar with the real estate tax code, okay? But so if you own a property, you need to have somebody else doing your taxes. Let's just say that, okay? But two, it's really important to understand that the large purchases and improvements that you made on your property are accurately classified under the depreciation schedule on your taxes. Okay. Because if not, then you could be missing out on really, really, really good deductions, and you could be overpaying in taxes. And so we don't want you to do that. So that's really important for you to understand that now, this part of the year, sharing that with your tax professional so that you can make sure that you're taking advantage of all the deductions that you need to before the end of the year. All right, so let's go to the next step. Number 2, this is another really, really important task that landlords need to do before the year ends. You should be doing a strategic portfolio review of all of your properties. This is very, very important. You should do this hopefully at least once a quarter, but if not, annually. After you know how much you made, what your expenses are, and your books are up to date, because you can't really even do this part until you know your books are up to date, okay? Because you don't know how much money you're making. So once you know exactly how much money you're making, then you need to break it down per property. All right. So that allows you to see how much income are you making per property, and then compare what your expenses are for each property so that you can know how much you're actually making in cash flow, how much has that property appreciated or lost value this year, and you're able to see the full return on investment from an annual standpoint for this property. Okay. That's really important. And when I say full return on investment, like you're able to review, like, this is how much depreciation I was able to use for this property. This is how much cash flow I was able to make. This is how much equity I was able to grow on this property. You're able to see the full review of how the property performed. And then you're going to ask yourself questions like, which properties perform really well? Which ones drain the heck out of me? Maybe you have a property in an HOA and that HOA is driving you nuts. Okay. Plus, plus that property didn't make no money. What you thinking? Should I keep this property? That's a good question. You should be thinking that, right? But this review helps you to see it from a holistic standpoint, not just one factor. Okay. You should be looking and asking yourself, which one surprised you? I remember I did this a couple years ago, and I had a property that surprised me. I was like, "Oh wow, this property that was a single family conversion made more money than this fourplex. Oh wow, okay, maybe I should invest more into single family conversions." Aha, aha. Why it's important to understand the data, because the data will inform you how to move forward. Again, I started off by saying that, when you own a few properties, hustling is not going to get you to the next level. Strategy, working smarter, not harder, is going to get you to financial freedom. Okay. So these are the questions, and this is what you're asking yourself as you are reviewing these things. So you're looking for your return on investment, you're looking for your cash on cash return, you're looking at maintenance. This is a big one too. Or as you're looking at your income, you're looking at the expenses, you're like, man, this property makes a lot of income, but why are the expenses so high? You may have a problem that you need to look into to figure out what's going on. That can inform you as you move forward with planning into 2026. You're looking at your vacancy rate. Okay, what was your vacancy rate according to how much you actually plan for? Maybe you budgeted each month to save 5% in vacancy, but the vacancy was consistently 2% for the last few years. Okay, well, maybe you can not have to save 5% if you know that it's been 2%. Or maybe you save 5%, but it's actually been more like 10 to 15%. You pivoted to midterm rentals, and you thought that you're gonna be making more money, but at the end of the day, your vacancy is higher, so you're actually not making much money. This happened to me a few times. I had properties, whether it was set up on short term or midterm rental, and if you know about having short-term and midterm rental, you also have to, you have to keep the utilities on, you have to have internet, you have to do all of that. And so when I did my portfolio review, I realized, shoot, this actually isn't making more money than it would just as a regular long term versus a short term, but I'm spending more energy managing this as a short term. Let me consider pivoting this to just long term. Those types of you learn those things once you do this review. So you're no longer making decisions based off of emotions. You're making decisions based off of data, and then your strategy informs what you do next based on the data. Okay, really important. And so this exercise will show you if you need to plan to sell a property next year, if you need to refinance a property, if you need to maybe change your rental strategy, etc. This is a really good practice to be able to do on an annual basis to help you, plan for the upcoming year. All right. And number three, this is all about planning for your renewals, maintenance, everything like that looking forward. So after you get your books in order, and after you do your portfolio review and you start making some decisions about what you need to do moving forward, now you have the information, you have the data. Like maybe you do have a lot of expenses and you need to make some changes. So now you're able to take that and be able to plan for the future. Maybe you have an HVAC system that you need to replace so that you can plan your cash flow, save a little bit of money every month, and then plan for that later in the year. Or maybe you realize that your insurance has gone up. You can contact your insurance company and see if maybe you can adjust your adjustable to try to maybe do a higher deductible so you can get a lower monthly payment. Just various things like that. You also are looking at, oh, when are my leases up for next year? When do I need to reach out to the tenant to see if they want to stay? Do I plan to increase rents this year? These are the things that you're looking at during this phase. You're also looking at, maintenance schedules, cleaning gutters, scheduling HVAC companies to make sure that they are taking care of your HVAC. You're planning for your preventative maintenance on your properties as well. So these are really, really important things that you should be doing before the end of the year. Let me know, was this helpful? Were there other things that you're planning to do by the end of the year that you feel like is really important? Share that with me in the comments. And if you're listening on Apple or Spotify, please leave me a review and let me know if this episode was helpful for you. All right, guys, thanks so much for listening to another episode. Don't forget to like and subscribe, share this with some friends if it was helpful. and I will see you very soon. Bye.